We're literally days away from the fourth Bitcoin halving in history. And we're going to cover today, what is the Bitcoin halving? What can you expect if you're an investor in cryptocurrency and other investments around the cryptocurrency space? And of course, most importantly, how do you make money from it? So who else better to have than our very own in-house crypto expert, James Altucher. James, how you doing today?
Really good. And Doug, I don't even want to call this the Bitcoin halving. And I'm not trying to exaggerate the importance of this halving, but let's just to distinguish it from prior halvings, and each one has its own special characteristics. This halving is the super halving. Like, no BS. This halving is unlike any halving that's ever happened on Bitcoin before. And we'll explain what the halving is, but also it's unlike any halving that's going to happen again. This is this is the real deal. This is the halving that's bringing it all to a crux. All this 15 years of Bitcoin and the next 1,000 years after that.
Well, if you wanted to get people more excited about an event that only happens for every 4 years, I think you've just done it. So let's go ahead and let's jump right in. What is the Bitcoin halving and why is it important?
Right. And first off, I want to say there's a big reason why it might not be important at all. And it's important to note that. But let's explain what the Bitcoin halving is. So basically, every roughly 4 years, it's not exactly 4 years, every roughly 4 years, the amount of Bitcoin that is issued each day gets cut in half. And there's a reason for that. So as you know, there's a fixed number of Bitcoins. Unlike the US dollar, where on any given day, the Federal Reserve could just hand out another $1 trillion. Bitcoin there's a limit. You cannot print new Bitcoin. There's 21 million Bitcoins out there, but some of those 21 million have not been released to the public yet. And so what happens is, this is very important to the fundamentals of Bitcoin. Let's say I buy a piece of pizza from you for a Bitcoin.
So
now someone's got to say, well, James has a real Bitcoin. It wasn't a forgery. It wasn't a counterfeit Bitcoin. So with dollars, that's what the banking system does is, you swipe your Visa through the machine. The machine calls up your bank. The bank says, oh yeah, James, he's good for $10. That transaction's good. Now, what that means though is you're paying fees to the restaurant, say that you bought the pizza, fees to the credit card processing company, fees to Visa, fees to the bank, maybe a small fee just to throw it to the Federal Reserve just for the heck of it. There's all these fees, and there's potential for human error. If someone hacks into your bank account, or if the bank uses AI and thinks that this is a fraudulent transaction. There's a lot of reasons why sometimes. You ever have that happen, like at an airport, like you fly someplace and you just bought something in New York City, and 3 hours later you're buying something in LA, and the bank says, no, that can't possibly be Doug Hill. It's a fraud. And you're frustrated and it's embarrassing. There's a whole line. So anyway, long story short, there's a group of people called miners, Bitcoin miners. It's like people who mine gold. There are people who mine Bitcoin. And what they do is they raise their hand and say, listen, we will validate transactions for the whole Bitcoin ecosystem. And there's a complicated way that they do that. But so Bitcoin miners validate transactions using this very complicated mechanism, and they get rewarded for their efforts. They're not doing it for free. For every block of transactions that they validate, they get 6.25 Bitcoins. Now, what's going to happen roughly in a few days, or roughly around April 20th, give or take, is that number for the first time in 4 years is going to go from 6.25 Bitcoins per block to 3.125 Bitcoins per block. So every Bitcoin miner is suddenly going to have less reward for their efforts, one half the reward for their efforts. And that's going to make a significant change to the Bitcoin ecosystem, some good changes and some bad changes, and some interesting opportunities and some opportunities to avoid. So that's basically what the Bitcoin halving is. We haven't discussed yet what it means as an investor or what it means as a miner or a Bitcoin holder, but that's what the halving is.
Okay, so if I am a miner, and there are thousands of these miners all over the world, right? I mean, there's a large number of people that have committed their computer resources in these super fast computers to mine these cryptos, to mine Bitcoin specifically. And
Yeah.
and they're burning a lot of electricity. They have infrastructure costs. The machines are not cheap. The processors in them can be very expensive, and so forth. So when you cut that in half, when you cut that Bitcoin reward in half down to 3.125 Bitcoin per block, that has a pretty big impact on the whole infrastructure of Bitcoin, right? So people are getting paid half for the same amount of work that they did the day before, right after the halving.
Right. And so here's the thing. You mentioned a really important point, is that Bitcoin mining requires a lot of electricity. So in order to mine coins, you have to run, like you said, you're sort of competing with the other miners. So you have to have really powerful supercomputers doing these very complicated math equations. And I won't get into the technical details. And you burn up a lot of electricity. So the biggest cost of Bitcoin mining is your utility bill. And you get these Bitcoins, and your electricity costs are almost as much as the Bitcoin that you just earned. And so one thing that has to happen every single day is that these Bitcoin miners have to sell a certain chunk of the Bitcoins they just earned that day. They have to sell a certain chunk in order to make sure they pay their electricity bill. Like, the worst thing they can do is get all this Bitcoin, and then suddenly, for whatever reason, the price of Bitcoin crashes, and at the end of the month, they can't pay their utility bill, so they go broke. So every day, in order to manage that risk, they sell a certain percentage of the Bitcoins they earned that day.
All right. So the infrastructure. All right. So we understand now, I think, what Bitcoin, what the halving is. The halving is cutting the amount of money or the number of Bitcoin that miners get as a result of verifying all these transactions. Why does the halving matter so much, like leading up to and after the event itself? Why does it matter how much these miners are getting paid?
Yeah, it matters for a lot of reasons. First off, the Bitcoin halvings are going to continue until the year 2140, and at that point, 21 million Bitcoins will be released into will be. Right now, almost all the Bitcoins are already out there. Something like 20 million is already out there, or give or take. But the full 21 million, specifically 20,999,999 Bitcoins, will be already mined and all released to the public by the year 2140. So there's going to be halvings that happen until then, but they're going to get smaller and smaller and probably have less importance for reasons we'll discuss today. But why does this matter? Well, there's a very stupid reason why this matters, and then there are more interesting reasons. The stupid reason it matters is that in the prior three halvings, there's only been three other halvings: 2012, 2016, and 2020. And the prior three halvings, people noticed, oh my gosh, within the 1 to 12 months after the halving, the price of Bitcoin skyrockets an average of 200%, 150%, 300%. It's been different each time. And there's all sorts of statistics. Oh, whatever year the halving's in, if you look at from January to December of that year, Bitcoin's up an average of X, or 12 months, 6 months after the halving, it's up an average of X, or these altcoins go up when there's a halving. So here's the reason why that's a stupid reason. First off, statistically, 3 examples is not a statistically significant example. Let's say you're standing outside a store, and one person comes out of the store, 2 person comes out of the store, 3, and they're all Asian. You wouldn't say to yourself, oh, every person that ever comes out of this store is Asian. It's just not maybe if 100 people in a row came out and they were Asian, it's statistically significant. Maybe. but 3 is not statistically significant. So if I flip heads 3 times in a row, it doesn't mean, oh, I'm probably going to flip heads the 4th time. That's what usually happens. It doesn't work. Statistics and probability don't work that way. So a lot of people don't know more about the halving other than that the halving usually triggers the price to go up. Now, however, and I used to think, okay, this is useless information. It's just luck. It's like, do you remember the statistic? The stock market used to go up every year that the AFC would win the Super Bowl as opposed
Yes.
to the NFC.
Yes, I do remember that. Yep.
And there were like 12 examples, and it was true. And so people would literally bet on the stock market in January, depending on who won the Super Bowl, just because they didn't know a little deeper what statistically. However, so I used to think it was just like a statistical non-event, but after thinking about it, I realized it is important. So remember, miners have to sell their Bitcoin after the day of or the day after they get all this Bitcoin because they want to make sure they pay their utility bills. So every day there's hundreds of Bitcoins for sale automatically because of Bitcoin mining. And Bitcoin mining, of course, has to happen. If there's no Bitcoin mining, there's no validating transactions. So Bitcoin depends on mining, and the miners depend on being rewarded, and they also depend on electricity. And so every day there has to be hundreds of Bitcoins for sale, just so that the miners who are critical can pay their electric bills. And when a Bitcoin halving occurs, that means every day there is half of the amount of coins for sale. And remember, by the way, economists, that's a crooked profession. Every single economist predicted 100% of economists predicted a recession last year. There was no recession last year. So I don't even know why this exists as a profession. But the one thing you should know about economics is that the price of every object in the world is a function of how much supply of that object that there is compared with how much demand. So if I have a lot of demand for Yeezy sneakers and there's no supply, then the price of those sneakers goes way up. If there's a lot of demand for gold, but nobody has dug up any gold lately, the price of gold goes way up. So if the supply of Bitcoin for sale every day is cut in half or is lower, because there's other reasons people sell, but is lower, and the demand simply remains the same, then the price of Bitcoin goes up. And that's what we've seen happen in 2012. I know you have some statistics to share, Doug, but 2012, 2016, 2020, there were other reasons, of course, Bitcoin went up, but it's a good kind of like thrust. Like, you need a rocket needs that initial thrust to get into space, and then other things keep it going, even further. So that initial thrust is the Bitcoin halving, where suddenly the demand one day shouldn't be different than the demand the day before, but supply is drastically different, down. So that means price goes up.
Yeah, I mean that makes complete sense. That makes complete sense that there's less supply than of Bitcoin as a result of the halvings. Therefore, if demand just remains the same, price goes up. So you mentioned, let's do this. Do you want to look at what's happened in the past halvings? Because I do have a chart I can pull up here and share with
let's
you.
Look, because again, like, I don't think it's statistically important, but I do think it shows what has happened the last times there's been this cut in supply. We don't know for sure if all this price increase was due to the cut in supply, but because there's another thing that's happening, which is so many people are anticipating this, it's almost like a self-fulfilling prophecy. And that's both good and bad, which we could discuss in a bit.
All right, July 2016, it's at $606 in July, and then by 2018 it peaked out at that final stage at $13,657.
Or it reached a high of 20,000.
Now, what was that? Is that later? I could change my date. I could change my
No, no,
date
no, no,
range.
no, no. On your chart there, that month, that particular month in 2018, um, it closed at 13,000, but the high that month was 20,000.
Oh, I see. Okay, so this is it's just the way the chart's drawn then.
Yeah, that's in December of 2017. It looks like.
Yeah.
So basically, less than a year and a half later, less than 18 months later, it went from $600 to $20,000 after the halving. And by the way, it was pretty flat for most of 2016 until the halving.
So what I'm looking at here, James, is a monthly interval. And over here on the left, this box over here on the left, it says, yeah, there's the high, $20,089, the high in in December of 2017. So,
Right. So
and,
so
yeah,
basically that's 17 months or 16 months after the halving of 2016, where by the way, the price from January 2016 to June 2016 didn't really change that much in Bitcoin, but then suddenly on the halving occurs July 9th, price goes from $606 to 20,089 within 16 months.
yeah, that's crazy. All right. Well, let's do this again because that was the second halving. Let's go to the most recent halving that happened in 2020, right? So we'll pull this up.
Yeah.
We'll go 2019 to 2021.
And remember, so 2019 was like the deadest month ever, or the deadest year ever for crypto. Most people were saying crypto's a fad, crypto's going to zero. Jamie Dimon was trashing it, the head of JP Morgan, all the heads of the banks were trashing it because why wouldn't they? Crypto gets rid of the need for banks. So, of course, the heads of banks are going to trash it. And just it wasn't moving anywhere. Look at that. Look at 2019. April, July, October.
Nothing.
It's all just flat down.
All right. So let's take a look at this. When was the halving in 2020, James?
So May 11th, 2020,
Okay,
right when we were all locked in our houses with nothing else to do but trade stocks, watch TikTok videos, and I don't know, use toilet paper.
Lots of it.
Toilet paper, by the way, being the classic economics 101 example of supply and demand driving price crazy.
Oh, yeah. And driving people crazy in stores, too.
Yeah. People in New York City, just like 3 blocks from me in the Upper West Side of New York City, there were people like fighting on the ground in Trader Joe's.
Yeah. That usually only happens around Christmas time at Toys R Us back in the day. You remember those?
Yeah.
All right, so May 11th, I have that on my chart right here. It's trading around $9,600, $9,700 for a Bitcoin. So then what happens? The halving happens the next day, and then
then just money flooded into crypto. I mean, then by November 2021, which was about 2 years later, Bitcoin hit $69,000.
Let me get November in. There it is. Okay, so yep, 68,789 in the box over on the left. You can see that right there. All right, so
which is very interesting, by the way. So it multiplied by 10, right? It multiplied by 1,600%, something like that. And the stock market, you could argue gained during the pandemic because of inflation, and the U.S. printed a whole bunch of money, so some of that money went in the stock market. So the stock market had some great years, but it wasn't up 1,600%. There's something else going on when an asset class is up 1,600%. That's incredible.
Yeah, I mean, is there a chance that these run-ups had nothing to do with the halvings and they just happen to coincide around them? Or do you think that the economics driving the halving is the reason why the prices went up?
I think in the middle. I think 2 things are happening, particularly now. One is for the supply and demand reasons I said earlier, there mathematically has to be some effect on price upwards when a Bitcoin halving occurs. Now, I do think that's like the initial thrust, and then there's other reasons. Like during the pandemic, you know, there was so much like 40% of all the money created in history was created in the 2 years after the pandemic started. And so when that happens, that's the entire reason this anonymous guy, Satoshi Nakamoto, in 2009 created Bitcoin, is because he basically said to himself, am I going to trust a bunch of anonymous people at something called the Federal Reserve? I don't even know what that is, the Federal Reserve. Am I going to trust them to take care of the money that I worked really hard for that is in my pocket right now? Or are they going to print another $5 trillion? He said this in 2009 after the financial crisis of 2008, 2009, when the Federal Reserve also printed a lot of money and the value of the dollar goes down. Again, supply and demand. The more dollars there are, if dollars are everywhere, I don't care as much about them. It's too many. So supply went up too much. The value of the dollar goes down. That's another way of saying there's going to be inflation. And basically, I mean, the dollar has inflated every year since the Federal Reserve was created. I guess in 1913, the dollar has inflated every year except for maybe 1930 or 1931 in the middle of the Depression. Mm-hmm. Every year the dollar has inflated. So $1 now buys you the same kind of amount of items as 3 cents in 1913. Now, arguably, you can buy better items now, like phones and things like that. But 3 cents in 2013 has the same value as a dollar now. That's how much inflation has ruined the value of the dollar. So Satoshi Nakamoto said, I don't want other people to decide the value of the money I worked really hard for. So he created Bitcoin. There had been prior attempts to create something like this, and also gold is it's what's called a store of value. Like if you don't trust your currency, then you put it somewhere where you think the value is safe. And Satoshi Nakamoto's argument was Bitcoin, for a lot of reasons, the value of Bitcoin is safe relative to the dollar. And we can list some of those reasons, but the most important being is that there's only going to be 21 million. You can't print up any more.
Yeah, and I think that's the key takeaway, right? So he's like, I just want to make sure that everyone knows there's a cap where there isn't in dollars. So you said something early on that got everyone's attention, I think, is like this halving is different. This halving is a super halving. Why did you say that?
So, I do want to mention, though, that's why part of the reason Bitcoin went up so much in 2020, 2021 is because trillions of dollars were printed, the dollar lost value, and everybody said, oh, no, I should be in something safe. Yeah. You know, I'm going to put it either in gold or in Bitcoin. Gold is hitting all-time highs as well. It didn't go up as much as Bitcoin during this period because Bitcoin has a lot of benefits over gold, which we could discuss or not discuss. But suffice to say, that's another reason why Bitcoin went up as well as the halving. But maybe the halving was kind of the first thrust. You know how like if a rocket's going to the moon, first they have the big thrust from the Atlas rocket, and then that spins off, and then you need basically just smaller thrusts to keep it propelling into space. So that's kind of like what the halving does, is it gets it into space, but then you still need to get to the moon.
Well, all right, so let's talk about this super halving that you mentioned earlier, because I'm looking at what happened in 2016 and in 2020. Those halvings looked super from an investor's perspective. They looked great. I mean, you're going up, 16 times your money or more just in Bitcoin alone. Why do you say this one's different?
Well, first off, in 2012, nobody knew what Bitcoin was. I mean, you had to be really into like tech and what was going on in the tech world to really even had you ever heard the word Bitcoin in 2012?
I heard about it in 2011 and I had no idea. The guy that was explaining it to me was very smart, and he told me that there were these people that were mining money with their computers, and my head was not capable of processing that information. I didn't get it.
Yeah, and the culture around Bitcoin encouraged that lack of understanding. Like
Mhm.
everybody thought they were in the in club, the cool kids club, if they knew about Bitcoin, not realizing that you want to make it as simple as possible so
Right.
more people can use it. But okay, that's what's been happening these past few years. Even in 2016, it was still kind of like the cool kids club, but enough people had heard about it that, oh my gosh, here's this thing that went from 10 cents to $100 to $1,000 and it's still going up. I'm buying. And so that's when
Mhm.
kind of had this first boom. Like, I mean, it was definitely a boom in 2012. Don't get me wrong, but nobody knew about it. It was the boom that nobody heard. And but in 2016, everybody became aware. Everybody heard the word Bitcoin at least.
Yeah.
And I'll admit, in 2013, I used to have these regular Q&A sessions on Twitter where people could ask me questions about investing or writing or economics or politics or relationships, whatever. I would just have fun. And I did this every Thursday for years. And somebody in like early 2013, like February 2013, said, "What do I think of Bitcoin?" And I said, "You know what? It's probably a scam." And I just said that off the cuff without thinking about it because I didn't know anything about it. And at the time, right after that, a friend of mine, Naval Ravikant, calls me up and says, "I'm going to be in New York City. Let me sit down with you and explain Bitcoin." And he did. And we spent all day. He went. I had a million questions. I really didn't understand it at first, and he went over every aspect of it. And then I agreed with everything he was saying, but I wanted to read more, so I read more and more and more, and I looked at the code, and I really became immersed in Bitcoin to the point that in May 2013, I created a store that only accepted Bitcoin as currency, and it only had one product in it, which was my own book a month before I was going to release the book. It was a book I wrote called Choose Yourself, and I was going to release it June 1st. On May 1st, we opened up this store that only accepted Bitcoin, and I was going to sell. I sold each PDF file of Choose Yourself for 1/10 of a Bitcoin, and it sold 61 copies. So it's about 6 Bitcoins. So I sold 60 copies of the book, a PDF of Choose Yourself, for about $420,000 in today's dollars, which is insane.
Yeah, the most expensive book in history, I would say.
Yes, yes, that was the most valuable book in history, other than like the rarest of collectibles.
Yeah.
But so look, it was easy to kind of dismiss Bitcoin, but I'm glad I learned about it early and got involved and so on. So in 2016, though, that's when the rest of the world sort of said, "Hey, I can invest in this. There's something called Coinbase, and I can open up an account just like a stock at my stockbroker, and I can start buying this." But that was individuals. Note, it's not like Fidelity was suddenly lining up along with the individuals and saying, "We need to buy a couple of $1 billion worth of this." No institutions bought any Bitcoin then, like nobody. And so that's one thing. One thing, and there are several things. One thing that makes this halving a super halving, and the last super halving, I will say, is this is the first halving where the institutions that are online with us. We're all online to buy some more Bitcoin, or everybody who's online to buy more Bitcoin. Everybody's standing next to Fidelity, BlackRock, Schwab, J.P. Morgan. Like all the people who said, "Oh, Bitcoin's a fad," they're all lining up now, and they're not lining up with $10 or $1,000 or even $100,000. They're lining up with billions of dollars. I mean, so in January of this year, 2 months ago, 3 months ago, uh, the SEC finally, after years and years, said, "Okay, we're going to allow Bitcoin to be regulated, and we're going to allow it to be an ETF, an exchange traded fund," which means it's a stock that Bitcoin is essentially. The only way easy way to explain it is Bitcoin's essentially a stock that trades on the New York Stock Exchange. And BlackRock's behind one ETF, Fidelity's behind another ETF. There's like 12 of these ETFs. The BlackRock ETF, so BlackRock, by the way, has something like, what is it, 10, 15 trillion dollars in assets, or 100 trillion in assets. It's the biggest private equity firm on the planet. So
Yeah.
10 trillion in assets. And they are the most bullish institution on the planet for Bitcoin. So a company with 10 trillion to spend loves Bitcoin, and they started the ETF. Larry Fink, the CEO of BlackRock, just said today this is the fastest growing ETF in the history of the stock exchange. So, that's so many people were waiting. They were just waiting for the SEC to say, yes, Bitcoin is legal. It's fine. Don't worry about it. And here's an ETF. You can go buy it. So many people were waiting on the sidelines, and they're still lining up and waiting. I mean, the inflows into these Bitcoin ETFs is enormous. And I'll just mention, when the first gold ETF was created in 2004, that gold ETF, or gold in general, went up every year for the next 7 years, even, right through bull markets and bear markets. Just the gold, because of the ETFs and bringing in institutional money, the price never slowed down. And
All right.
this is 10 times bigger than that.
So James, just not, and I interrupted you. I apologize, but just to compare this. So at a time during this halving, when the supply of new Bitcoin going onto the market through the mining process is cut in half, you have the largest ETF in the history of the markets, money flowing into that ETF to buy that exact asset, which in this case is Bitcoin. So that's a collision of supply and demand and very, very big ways. What is your prediction for Bitcoin pricing in the next, I don't know, year or so? What do you see happening with the price of Bitcoin?
Well, okay. So in 2017, I went on CNBC and I said, I think Bitcoin's going to be $1 million. And everybody laughed at me. Bitcoin was what, like $5,000 then? And look, Bitcoin's not $1 million yet. But if you listen to me, would you be laughing? No, you got the direction right. Unless you made a specific bet, like Bitcoin's going to be at 1 million, or else I lose money. But okay, I got the direction right. I think, though, much more reasonably, within the next 12 months, we can even see it by the end of the year. I think Bitcoin's going to be between 150 and 200,000. I do think ultimately, look, here's the thing. People, this is very important. People buy Bitcoin now, not as a currency. They buy Bitcoin because, look, inflation still exists. Like, the Federal Reserve raised interest rates 11 times, and they still haven't stopped inflation. We just saw the inflation data went from an annualized 3% inflation rate to 3.5% inflation rate. So guess what? Inflation had been going down, but now it's going back up. And how do you stop it? The Fed keeps saying, Joe Biden said today, oh, the Federal Reserve is definitely going to cut rates this year. If you cut rates, you're not stopping inflation. Right. So, the Federal Reserve, they're who knows if they're going to cut rates, but they're probably not raising rates anytime soon. So inflation still exists. Congress is passing $1 trillion spending bills. I'm in favor of them doing that, by the way. More money in the economy, the better the stock market does, the better other things do. I'm not necessarily as anti-inflation as other people, but inflation, everybody says I'm scared to own the dollar. There's no other currency better than the dollar. Like, I'm not going to buy the peso or the yen or the Chinese renminbi. I wouldn't do that. So Bitcoin or gold it's what's called a store of value. It's a flight to safety. And gold, there's $15 trillion worth of gold in the world. The Bitcoin, there's $1.5 trillion worth of Bitcoin. So let's say Bitcoin were to replace gold as the place you store your value, the place where of flight to safety. Well, what's $70,000 times 15? This is 1.5 trillion versus 15 trillion, or sorry, times 10, 700. That would suggest a price of $700,000, and that's just if Bitcoin replaces gold. Remember, Bitcoin is not out to replace gold. Bitcoin is out to replace currencies. There's $250 trillion worth of currency in the world. So you'd have to multiply Bitcoin by 250 to get the full potential price for Bitcoin. Now, okay, I don't think Bitcoin's going to replace all currency. First off, there's other cryptocurrencies. Second off, there's no reason why it will replace all the global all the global currencies. But let's just say it replaces half of gold, which is certainly doable for a reason I'll say in a second. Uh, Multiply by 7 from where it's $500,000.
Yeah.
So Bitcoin can easily, within the next 4 years, hit $500,000. 200,000 in the short term, like let's say 6 to 18 months, and then 500,000 by the time of the next halving. Particularly because now, for the first time ever, trillions of dollars of mutual funds, hedge funds, countries' sovereign wealth funds are finally, for the first time ever, as of 2 months ago, finally able to start buying Bitcoin legally. So
James, you've got to explain something to me because we've been working together for a long time, and you just painted a very bullish picture for Bitcoin. Yet you've publicly said many times that you don't own Bitcoin and you don't recommend Bitcoin. How do you solve that equation where Bitcoin could be $200,000 a year, which is a 200% increase, right? From where it is right now in the next year, up to maybe 5%, 500% increase in the next year and a half or 3 years. How do you reconcile that for someone who's listening that you don't recommend Bitcoin?
yeah, well, okay, I don't recommend Procter and Gamble stock either. So Procter and Gamble makes Crest toothpaste. They make a bunch of other products. I have no idea. I don't recommend Procter and Gamble stock either because it's not going to go up as much as, let's say, a stock in a new industry and like an AI stock, a new technology that's growing, 100% a year in their revenues. Procter and Gamble is an old company. It's steady as she goes. It'll go up, 5 to 8% a year, and that's it. Bitcoin, of course, Bitcoin is doing great. Bitcoin was the best performing asset compared to stocks, real estate, gold. If if you put Bitcoin in that basket, Bitcoin was the best. But Bitcoin was the worst in terms of other cryptocurrencies. Now, there are 23,000 cryptocurrencies out there. 98% of them are going to zero. But the ones that survive, they're going to survive because they are rebuilding the global financial infrastructure. That's what's happening is the economy is evolving just like it has in the past. We evolved from precious metals to paper money that was backed by precious metals, to paper money that was backed by governments, to digital transactions like with credit cards and PayPal, to now completely digital currency like crypto. So it's evolving, but you need Bitcoin by itself can't rebuild the financial infrastructure. There are dozens or 100 or so cryptocurrencies out there that are critically important to scaling cryptocurrencies and providing extra functionality so that cryptocurrencies actually become very useful other than just as a store of value or even as a currency. And so I'll talk about those in a second. There's another important thing happening here. It's not just institutions. This is why this is a super halving. It's not just institutions coming in. And I don't think you and I have ever spoken about this before. Institutions are critical. That's tens of billions, hundreds of billions of dollars, trillions of dollars. That's critical to the growth of Bitcoin. And it only just started. And that's coinciding with this halving, which makes this halving on steroids. But what really makes it a super halving also is, guess who just turned 18 years old?
I have no idea.
The youngest member of the Gen Z generation. So Gen Z is defined as people basically ages 18 to 26. People born from 1998 to 2006 is Gen Z. So the Gen Z, the youngest Gen Zers are now adults. And as a generation, 25%, even now, out of all the 18-year-olds and 26-year-olds in the country, 25% of them own crypto. Of the boomers, which is right now the generation retiring and then, eventually they will pass on, 5% of boomers own crypto. Only 5%. So the generation and by the way, Gen X owns 10% of Gen X owns crypto. So you and I were Gen X.
Yep.
But
We're
Gen
adding
Z,
to that percentage.
25%.
We're adding to that percentage, that
Right.
10%. Yeah.
Right. We're
We're
part of the
part of the 10
10%.
percenters.
But 1 out of 4, like all my kids own crypto without me telling them. Like 1 out of 4 18 to 26 years olds own crypto. They don't own gold. So the gold buyers, the people driving the demand for gold, sadly are dying. I've spoken at gold conferences. They're dying. And the Gen Zers, not only are they buying Bitcoin, but they also are buying other coins. And they know what coins, because they're on the message boards, they're talking to their friends. They have a handle on the meme coins that are going crazy for no reason, or the coins that maybe are critical for this building of the infrastructure. But what we see, and look, we've seen this in the portfolio of our crypto newsletter, is when Bitcoin goes up 1%, some of these coins go up 5 to 10%. When Bitcoin doubles, I mean, we have coins up over 2,000%.
Yeah.
So, these coins, not as many people know about them. It's a maturing industry. It's unclear yet which ones are going to be the most used. It's harder to research which ones are going to be used, which ones are just good ideas. So, but many of these coins will be used to rebuild a $250 trillion economy. 1.4 quadrillion if you include all options and derivatives, which you should, because a lot of these cryptos are involved in options and derivatives. So
All right. So,
that's another thing that makes this truly a super halving. It's finally we're all meeting. I remember them as babies, the Gen Zers. They're now adults for the first time, and they're combining with the institutions, and they're combining with these people who are always into Bitcoin, but that's a bigger and bigger group every day. So all three of these groups are converging, and boom, this is the one and only super halving. This will never happen again.
well, it's very exciting, James, and especially like the smaller coins, they tend to move a lot during these halvings. Like Bitcoin, like the meteor of Bitcoin, just drags a bunch of these smaller coins, these alternative
Which
coins.
is why I even recommended people don't buy Bitcoin. If you're going to buy a blue chip crypto, at least buy Ethereum.
Yeah.
Okay. Ethereum at some point, whether it's, some people are predicting this year, some people are predicting later in the year, some people are predicting next year, there will be Ethereum ETFs. Right now, the rumors are that it might be slower than people think, which is good. More time to buy. But Ethereum is upgrading quite a bit this year to be more scalable. So I'm not making a push for Ethereum, but I'm just saying if you had to, there's two blue chip cryptos, and then there's others. There's the altcoins. But if you had to choose between Bitcoin and Ethereum, certainly choose Ethereum, which is smaller, more useful, has more transactions per day than Bitcoin, has more room to run. So Bitcoin will do great. I predict, $200,000, which if that was any other investment, I would say mortgage the house for it. But I do think a lot of other cryptocurrencies will perform better than Bitcoin, which is why I can't recommend it.
Yeah. Well, folks watching, you can tell that James spends a lot of time thinking and researching about cryptocurrencies, Bitcoin, and the effects that it's going to have on people's wealth. And this Sunday, you're going to be presenting a special event where you're going to go through and explain the 6 alternative coins that you're most interested in right now for this super halving. They're in the description below this video. There is a URL, there's a link. You can learn all about the event itself. Take a look at it, click the link, no obligation, just check it out. And James, I just want to say thank you very much for all your time. You've helped me a lot in my cryptocurrency investing over the last 6 years or so. So thank you for that. And thanks for your description of what the halving's all about. I think a lot of people are going to get a lot out of this.
And if I can, I just want to say, you always want to look at all the investing involved and see what's happening, because it's all connected to each other. So remember, we started us off by saying Bitcoin miners are going to make less money mining than they did before. So in the stock market, let's just take the biggest crypto miner that's public in the stock market, Marathon. Marathon Digital is the full name. So MARA is the stock symbol. The stock's been going down because everybody thinks they're going to make less money mining. They make money from more things than just Bitcoin mining, and I won't get into all the details, but if you're looking for a stock that particularly could have a short-term jump, MARA is more interesting to me than owning Bitcoin also. And so MARA, Ethereum, I would look into something called inscriptions and ordinals on Bitcoin to see other potential opportunities that are happening specifically with Bitcoin. There's a token, Avalanche, AVAV, that is related to that. So there's a lot of opportunities here, and you don't want to just look at Bitcoin. There's opportunities all across the investment landscape, and I think it's going to be a very exciting year after this halving, and because of the convergences that I've described.
All right. Well, you heard it from the man. Marathon. It's called Marathon Digital Holdings, MARA. A very interesting chart there, James. Again, thank you for your time. Really appreciate all your efforts in keeping our heads on straight around cryptocurrency. And folks, if you're interested in following James and seeing the work that he does, you can join his event this weekend. Just go ahead and click the link below, and you'll get all the details there. Thanks again, and we'll see you soon. Thanks, James.
Thank you, Doug.